Good morning, everyone. David Archer is my name. I'm the Chief Executive of Savannah Resources, and I'd like to tell you today about the best lithium project in Europe called Mina de Barroso. Just a quick sort of snapshot. Savannah is listed on the London Stock Exchange. We have a market cap of in the sort of 50 to 60 million pound range, and hence we are the highest market capitalised lithium company on the London Stock Exchange. We have a sort of series of supportive shareholders, including a major family office out of the Middle East in Oman, and we have a suite of projects, our flagship project being the Mina de Barroso spodumene lithium project in Portugal, a world-class heavy mineral sands project in Mozambique in joint venture with Rio Tinto, and some high-grade copper deposits in Oman. But I'll speak to you principally about our Mina de Barroso project today. We have a very able executive team, apart from myself, some of whom are here today. We're particularly sort of focused on taking Mina de Barroso through the current technical and economic evaluations with a view to being able to make a final investment decision around this project later this year. Lithium is something that's been very much on everyone's minds, and in the case of Volkswagen, very much on their lips as well. Volkswagen have just stepped up in a very sort of major way to the rollout of a very sort of comprehensive model fleet of at least 70 vehicles over 12 makes. And I think what you'll be sort of seeing is a sort of very major push by the European car manufacturers to sort of build out their model range, and in turn that will help to really create a very sort of deep lithium value chain here in Europe. I'd like to talk to you about Mina de Barroso. This is a photo of the one of the series of deposits that we have in the northeastern part of Portugal. This is a deposit that if a mining engineer could have designed a deposit, this would be the deposit he would have designed, or she would have designed. In this case, it's a near-surface, slightly dipping tabular ore body, which is over a kilometre in length, around about 600 to 700 metres in width, and at least 30 to 50 metres in thickness. It's spodumene lithium. That's the most heavily traded lithium mineral in the world, and really has been the basis for the successful development of the Australian spodumene lithium mining industry, and that's where most of global incremental demand has been coming from. I think the world's largest conventional lithium project is very important. It's certainly the largest in Europe. It's conventional. The capital markets have been rather harsh on lithium projects. They'll mark anything down that's got anything unconventional associated with it in terms of metallurgy or other aspects. Ours is conventional. It's open cut. It's very much the best analogue to the very successful Australian open cut mines up in the Pilbara and otherwise in Western Australia. We're looking at being a very sort of significant producer in the European context. We could actually supply the lithium carbonate equivalent to about 40% of Europe's demand in 2025 and up to 20% of its requirement in 2030. So this is a project of strategic importance to perhaps the most important industry in Europe at the moment, the car manufacturing industry. And we keep on delivering. This is a project that's grown in size since we secured it in 2017. We've had up to 3 drill rigs on site, drilling non-stop since 2017, and we now have a current resource of around about 23 million tonnes, an exploration target of 9 to 15 million tonnes, and we're looking at further resource upgrades in coming weeks and months, and broadly guiding to an overall resource in the 30 million tonne mark. One of the things I think that would be a key takeaway for everyone here today is to to remember that really this northeastern part of Portugal is going to be the largest lithium producing region in Europe. That's significant. Also because, of course, Europe is the second largest trading bloc in the world. It's got a very vibrant car manufacturing industry. This is the right project in the right place at the right time. We're seeing an enormous amount of support out from the Portuguese government. They can see the opportunity themselves, and they can sort of see an opportunity for Portugal to really develop a totally new industry around lithium. So we're getting really good support, which has been great, and that really only complements the wonderful infrastructure setting that we have in the northeastern part of Portugal. There's a lot of renewable power. That's renewable inputs are going to be really important for battery metals. That's going to be a key distinguishing feature for battery manufacturers, because the European car manufacturers will really want to emphasise their green credentials, and the green credentials of their major material inputs will be very important. So this is a strategic asset for Portugal, and it's an asset that we'll certainly be looking to sort of green label our lithium around. Very good road infrastructure, very good port infrastructure as well. The second largest port in Portugal, just north of Porto, called Leixões, is only about 140 kilometres by road to the south west of us. So that's all pretty good. I suppose the other wonderful feature of our project is that it really exhibits some really outstanding economics. This is one of the best mining projects I've had the experience of being associated with over a very long career, in excess of 30 years. The IRRs are outstanding. We've got IRRs of just less than 50% on an after-tax basis for the project, a relatively modest capital cost of mine development of about $110 million. Very quick paybacks of capital, and we've been talking to banks in recent months. That's a feature that they really like. And importantly, a very defensive annual cost of production on a per tonne basis. It's $210 a tonne in the first 4 years of the operation, the sort of the critical early years of the operation. It provides that very quick payback, and we're sort of clearly within the first quartile of costs. All of these numbers are based around also a very defensive and defensible projected spodumene price over the life of the project. We factored in $680 a tonne when we did our scoping study last year. Current price is somewhere between $650 and $700, so those very attractive project economics continue to apply, and it's a very achievable capex too, and very attractive NPV to capex, around about 3 times NPV to capex. There are not many mining projects around that display those sorts of numbers. One of the sort of key things we're moving forward with at the moment are offtakes and partnerships. That's going to be very key, and I think the really important feature of all of this is, we are the outstanding project in Europe. There is an ecosystem of potential off-takers, partners and investors who are interested in doing things in Europe, so our European location is key. We're working on a DFS at the moment that should be delivered later this year, and we look forward to being a significant and strategic producer of lithium for the fast-growing electric vehicle and electric storage market. And thank you very much for your time today. Finishing right on the dot of 0 seconds. Thank you.